This video is for the 3-3 work together and on your own. So I'm currently on page 39 in the workbook, and I'm on page 75 in the textbook. So we will continue to go where we left off on our previous work together page, which is on line 7. So the transaction, first one, is on April 12th. We paid cash for rent, $650, and that's check 4, so C4. So let's put in our date. We will need to put in 12, and then we will also need to put in our document number, which is C4. The two accounts we would have for this would be cash and rent expense. If you go back to page 64, that's where your chart of accounts can be found, and so you can see that we have a rent expense on there. So our two accounts would be cash and our rent expense. From my previous cheat sheet that I made in the last chapter, expenses increase with a debit. So our rent expense is going to receive a debit, while our cash is getting paid, our cash will receive a credit. The one account title I have to write down will be rent expense. And rent expense will receive a debit that will be recorded in our general debit. And our cash credit will also receive the $650. And that's done there. Our next transaction is on the 13th. We received cash from sales, $2,500. This is T13. This is for our tape that we would take off of our cash register. So I'm going to put in the date of 13 and then T13 for our ticket 13. So for this one, we have two accounts. We will have cash and we will have sales. It will be sales credit because sales is increasing. And then we will have cash as a debit. Both of these are special amount columns, so there is no account title to write down. But we can't just leave it blank because we will think we are missing something. For that, it is standard practice to put in a check mark, and we will also put a check mark in the post reference column. That's used in chapter 4. So once we go through and post, but there's nothing to post individually, so we'll put a check mark there. So this is for $2,500, our sales credit. We'll receive that, and so will our cash debit. So our debits and credits equal for this transaction, so we can go to our next one. On April 14th, we sold services on account to K Spa, $480. That's sale invoice 1 or S1. So let's put in our date. This was the 14th, and this is S1. Two accounts for this one will be our accounts receivable, and also our sales will receive a credit. So the account we have to write down will be for accounts receivable, and I am going to abbreviate that to make it a little bit shorter. So accounts receivable is a debit and it is increasing, so they will receive a general debit of $480, and our sales is increasing with a credit as well. On the 19th, we paid cash for electric bill, $220. That will be C5 or check 5. If you look back at your chart of accounts, you will see there is an account titled Utilities Expense. Utilities expense is typically used for phone, heating, all that stuff's kind of just lumped together. So we're paying cash for our utilities expense. We need to write utilities expense. Expenses are increased with a debit. So a utilities expense will receive a debit of $220. And then our cash is decreasing by the same amount, $220. On the 20th, we received cash on account from K Spa, $255. That's receipt 2. So I'll put in 20 and R2. Our two account titles for this would be accounts receivable, K Spa, and then also cash. both of these two accounts are assets. Accounts receivable, when we sold services to them on account, they increased with the debit. They're now going to be decreasing, and it's an asset. It decreases with a credit, so we will put in $255. And our cash is increasing since we received cash, so that will receive a debit of $255. And our last one for this work together is on the 21st. We paid cash to owner as a withdrawal of equity, $1,500. This is check 6. So I will put in the date and I will put in my document number. He withdrew cash, so cash is going to be affected by receiving a credit. It's subtracting the amount of cash we have. When Norma Dirks invested money into the business, we used her capital account. When she takes money out, we will use her drawing account, which is basically the opposite of the capital account. Capital is increased with a credit. Norma Dirks' drawing will be increased with a debit, so she will receive a debit for the drawing for $1,500, and then our cash credit will receive the same. So everything is filled in. Each line looks very nice. The only place we don't have the date or the document number is on the 5th, but that's because that transaction took 2 lines to complete. Next, I am going to go over the on your own. This is on the same page in the textbook, and in your workbook, it's on page 41. So the first transaction is on June 11th. We paid cash for rent, C4. That's basically the same transaction we just did on the previous work together. So I'll put in my date, which is 11. I'll put in C4. The 2 accounts that will be affected by this are rent expense and cash. Cash has a special amount column, so we just need to write rent expense. Expenses are increased with a debit, so we will give rent expense a general debit of $750. And we paid cash, so cash will be decreasing, so we will put $750 in the cash credit column. The next one is on June 12th. We sold services on account to G. Stratton, $800. That's sale invoice 1. So let's put in 12 and S1 for our document number. 2 accounts for this. Sold services, that's sales. So our sales credit column will be used. And it was on account, so it will be for accounts receivable, G. Stratton. And we do not have a special amount column for him, so we will need to write that account title down. Accounts receivable is increasing, so they will need a general debit for $800. And our sales is also increasing, so sales will need a credit for $800 as well. On the 16th, we received cash from sales, $4,300, ticket 16, so I'll put in my date, I'll put in T16. This transaction, we received cash from sales, so the 2 accounts that we will use will be cash and sales. We do not have an account title we need to write down, so we will put in a check mark in the account title column and also in the post reference column. And our cash we received from sales, $4,300, will be our sales credit and also our cash debit. On the 17th, we paid cash for postage, and it has in parentheses miscellaneous expense, $37. That's check 5. So they give us the expense account title that we will need to use, which is very nice. So we paid cash, so cash is going to be affected, and our other account is miscellaneous expense, and that will go in the account title column. And expenses are increased with a debit, so that will be a general debit for $37 and then a cash credit for $37. Make sure you're writing everything on the correct line. You don't accidentally put it up a line. And that just came to mind because I almost put it up a line when I was writing it. On the 19th, we received cash on account from G. Stratton, $500, receipt 2. So the date is 19 and R2 is the document number. The two accounts affected by this are cash and then accounts receivable, G. Stratton. So I need to write down accounts receivable, G. Stratton. Accounts receivable is an asset. The amount that he owes us is decreasing, so it's going down. Assets are decreased with a credit, so we will need to give accounts receivable a credit of $500. And that's the amount of cash that we receive, so our cash will receive a debit for $500. And then the last one, on June 20th, we paid cash to owner for withdrawal of equity, $1,200. C6, so let's put in the date, which is 20. Check 6. Ooh, there we go. When an owner takes out money for personal use or any assets of the business, the account title will be his capital or her capital account in this case. So the account title we will write down is Michelle Sullivan Drawing. The drawing is increased just like expenses are with a debit. So our drawing account will receive a debit of $1,200. And our cash credit will also receive $1,200. We have one more lesson using this same working paper from your journal. So we'll have to hang on it for just a little bit longer before we total and rule our journals.